Meta Platforms is down over 70% year to date. On today's episode, I'm going to explain why I'm still bullish. Let's take a closer look.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So first, we're going to start off by looking at some of the bearish reasons for the stock. We take a closer look at their most recent earnings and stock price dropped even more. Overall, we can see this company's free cash flow quarterly has dropped dramatically. Most recent quarter was $317 million compared to a few billion dollars a quarter ago. The main reason the company continues to increase its capital expenditures. We can see year to date how much it has grown. Quarter 3 of 2022 is up over 100% compared to quarter 3 of 2021. We are also seeing the overall kind of dilution of earnings per share decrease dramatically. Main reason, the advertisement business has seen numerous headwinds quarter over quarter and year over year. Due to the overall headwinds affecting the advertisement market, family of apps operating income has decreased dramatically, and this company continues to invest money into the reality labs, which continues to bring a huge loss for the company's total numbers. Overall, this is causing too much fears for investors, as there's discussions of, hey, is Meta Platform spending too much money in the metaverse? And if you are enjoying the episode, make sure to hit the thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Also, if you want to watch the #1 upcoming semiconductor podcast in the world, make sure to click this video above. So now that we understand some of the headwinds affecting Meta Platforms, I do want to take a closer look at some of the bullish reasons to own this company. And there is a lot of potential. And when I mention potential for this overall business, a lot of people just think of the potential from the metaverse, virtual reality, but there is huge potential in the advertisement side. Unfortunately, the advertisement market is, I want to say, something very boring, that even though the company might be producing new solutions in this space, because it's such a boring market, because these solutions might seem minimal, they don't get a lot of press, and certain investors might miss out on some of the moves that Meta Platforms is doing. And those are the reasons why I believe there is huge bullish potential. Let's take a closer look at some of those advertisement solutions. The first is the monetization of Reels, and this is Meta Platforms' short video term content. They do mention that last quarter, Instagram Reels had crossed a 1 billion annual revenue run rate. If we take a closer look at this quarter and combine both Facebook and Instagram Reels, that run rate is over $3 billion. And this is that they're still getting in early stages of monetizing Reels, so this has a huge potential of growing even further. Beyond Reels, they mentioned that messaging is another major opportunity for monetization. For example, click-to-messaging ads. This is one of their fastest growing ad products with a $9 billion annual run rate. Right now, this is mainly coming from Click to Messenger today, since that's where they started first, but Click to WhatsApp just passed a $1.5 billion run rate, growing more than 80% year over year. Here's a pretty cool picture showing the Click to WhatsApp messaging. For example, Jasper Markets, they paid for this advertising solutions. And if you want to get more information, you can hit send message, and then you would be directed to their WhatsApp number. I know WhatsApp is not that popular here in the United States, but internationally, this has huge growth potential. I do believe also here in the States, it has huge growth potential, and we are seeing with that growing 80% year over year. The company mentions outside of Click to Messaging ads, there is paid messaging. It's another opportunity that they're starting to tap into. This continues to grow quickly, but has a smaller base at the moment. And they are working with key partnerships like Salesforce, which lets all businesses on their platforms use WhatsApp as the main messaging service to answer customers' questions, send updates, and sell directly in chat. A prime example is this WhatsApp with JioMart in India, where if you are a customer, you can pretty much just order everything you want through WhatsApp and even pay through that platform as well. So these few solutions that I mentioned are in the advertisement space, and these are ones that can continue to grow in their core products. Again, I do want to say the advertising space is very boring, and none of these ads, I want to say, seem revolutionary, but they do provide strong growth run rate at the moment, which could overall help the growth for this company's advertisement revenue, which is their core products. Again, we are seeing a lot of headwinds right now in the advertisement space, but as those things start to end and the overall market continues to grow in the long term of things, I do believe there's plenty of tailwinds for these advertisement solutions to do really well and provide stronger revenue results for Meta platforms. Now, I mentioned earlier that capital expenditure is pretty high for Meta platforms. One of the main reasons is they are developing a lot of data centers and increasing their artificial intelligence and machine learning technology. Many investors might be worried that, hey, this company is spending too much money and it's not worth it. And I do believe a great question during the earnings call answers how much money this company is willing to invest. So Brian for Morgan Stanley pretty much asked Meta Platforms, can they give some examples of how this artificial intelligence investment is helping the overall business? And Susan Lee actually answered. And she mentioned that in Q2, they had shared that a single AI advancement in scaling their recommendation models had led to a 15% watch time gain for Facebook Reels. And that gain has continued to grow, and they expect that there will be additional watch time improvements coming from that work. They do mention on the ad side, they are also continuing to roll out more artificial intelligence and machine learning improvements in some of the new ad offerings, and they are encouraged by all the early examples that they've seen. So they do mention that their level of capex investments will depend on returns that they generate through these investments in AI. If they continue to see strong engagement and revenue gains, they will continue to invest there. If they don't, they'll pace on their spending accordingly. So even though it does seem like they're just throwing money out there in the capital expenditure, increasing their data centers, it does seem like they're doing it for a reason. And the moment they don't see the returns on their investments, they're gonna stop, and that kind of cash flow could be coming back to investors one way or another through repurchase or just the overall cash flow growing over time. So I do believe there's numerous headwinds here for Meta Platforms, but I do believe there's a lot of bullish reasons and a lot of potential. And like I mentioned, when I mention potential, I'm not just talking about the metaverse. Within their core products, there's so much improvements that can happen that can overall help this advertisement space. So take care, have a good day, and see you next time.